Welcome to my channel. Today we will be talking about the topic, best Amazon funding source when Amazon lending is gone. As a long-time Amazon seller, I've had to be nimble with financing. The reality is, Amazon lending is invite only, and if you're not in or it's not a viable option for your current needs, you need a strong plan B. This isn't about general business loans. It's about funding that understands the e-commerce cash flow cycle. Based on my experience, the strongest alternatives fall into two main categories, and you need to know the difference. 1. E-commerce specific revenue-based financing. This is my go-to when I need quick capital for inventory buys, especially before Q4 or a major sales spike. These companies, like Payability or Clearco, are built for sellers like us. The model. They look at your actual Amazon sales data, not just your personal credit score. They offer you a capital advance or a line of credit based on your future receivables. The pro, it's fast. I'm talking funds in your account in as little as 24 to 48 hours. The repayment is also tied to your sales. It's a percentage of your daily or weekly incoming payments, which I find much easier to manage than a fixed monthly loan when sales fluctuate. The con, the fees, often a fixed fee on the advance, can translate to a higher cost of capital than a traditional loan. You pay for the speed and convenience. 2. Specialized online business term loans and lines of credit. If you need a larger amount for long-term growth, like a new product launch, a warehouse expansion, or a big software investment, you need to look at online lenders who specialize in small business or e-commerce loans. Providers like Uncapped or QuickBooks Capital, if you use their services, are great starting points. The model. This is closer to a traditional bank loan, a lump sum with a fixed repayment schedule over a set term, e.g., 6 to 24 months. The pro. You often get a lower overall interest rate than with a cash advance, and a predictable monthly payment is good for long-term budgeting. The con. The application process takes a bit longer, requiring more documentation like business bank statements, P&L reports, and potentially a higher revenue minimum. It's for established growth, not just managing a short-term cash crunch. Ultimately, the best source is the one that aligns with why you need the money. Short-term inventory for a sales surge? Look at revenue-based financing for speed. Long-term, high-value investment for scale? Go for a specialized term loan for lower cost. Always compare the true cost of capital and how the repayment structure fits your specific cash flow. With that being said, thank you for watching. For more finance videos, kindly check my page. Please like, share, comment, and subscribe to my channel. Thank you.